Good afternoon. My name is Corbin Chevelle. On behalf of the IMP class, thank you for attending the Investment Management Program student presentation. We have been looking forward to this afternoon and sharing the results of our work with you. Before we begin, I would like to share a video clip from President Carter.
Good afternoon, all. Thank you for coming together today in support of our fantastic students in the Investment Management Program. Students studying economics across the globe are witnessing unprecedented times in industry and financial markets as a result of COVID-19. Here at SHIP, our elite students in the Investment Management Program do not just get to study and witness the markets like their peers on other campuses, but our students are also gaining the critical skills needed to engage with dynamic markets and manage funds in uncertain times. Yes, even in times like this, our IMP class demonstrates the best of what SHIP is about: enterprising students learning through real-world experience with engaging professors and appreciable support of benefactors who are dedicated to the critical mission of Shippensburg University. In addition, each year during the spring semester, IMP students have the chance to showcase their portfolio at an academic competition. The competition includes more than 1,500 students from 160 domestic and international colleges in a variety of categories. This year, they came away with a third-place ranking in the undergraduate value portfolio category, showcasing the academic leadership of Shippensburg University and the Grove College of Business. We are proud of this unique program and the invaluable experience our students receive. And we are tremendously grateful for the support of the SU Foundation and benefactors whose gifts support this great program each year. Thank you all again for your support and excellent work, IMP students and faculty.
All right, thank you, President Carter, for sharing that wonderful video with us. The idea of the investment management program was brought forth by Mr. Frank Wiseman. Mr. Wiseman was a graduate of The Ohio State University, where he obtained a degree in electrical engineering. In the early 90s, Mr. Wiseman read an article about a student-managed fund program in the Ohio State University magazine. This inspired him with a vision to help provide Shippensburg University students with the opportunity to gain real-world experience in the investment field, and approached the College of Business and SU Foundation with this vision in the summer of 1993. His original idea was to help students think independently outside the classroom by establishing a program where the students would be fully accountable for the outcomes by being 100% in charge of the decisions being made. Jumping ahead 2 years to the spring of 1995, an initial investment of $15,000 was donated by the Joseph Hunt Fund with the promise of receiving the money back. As Mr. Wiseman observed how the IMP class was operating, he followed up with a donation of his own stocks valued at $14,856, thus marking the official start of the investment management program. Furthermore, the Wiseman Fund exceeded a value of $100,000 in 2015 and has since awarded $1,000 scholarships annually to incoming finance students, being one freshman, one sophomore, one junior, and one senior. Now Lonnie would like to say a few remarks for the SU Foundation.
Yeah. Good afternoon, and thank you, Corbin. As Corbin has shared with you, my name is Lonnie Longarzo, and I'm joining you today on behalf of the Shippensburg University Foundation. Traditionally, this is the time of year, the first Saturday in May, that we hold our annual IMP reunion and IMP dinner at the Courtyard by Marriott at Shippensburg. This is where the students present their annual IMP annual report and their experiences with the class to alumni and benefactors. We are so excited that the students have the opportunity to present today, and also that we have some of our benefactors listening in. Over the years, we've been fortunate to have Frank Wiseman's daughters, Louise Lovell and Florence Mills, both travel from the DC, Virginia area to spend time with us and meet the students at the annual dinner. This year, they send their greetings and a message to the students about their father. I'd like to share that with you today. Greetings, IMP students. We'd like to first congratulate you on your determination and resolve during these uncertain and challenging times. You have navigated through and have accomplished what you have set out to do. The IMP class, the Winnipeg University GLAME Global Portfolio Competition, and now this, your final presentation. As we have shared with IMP students before you, our Father believed in all of you. He had a strong commitment and vision for the IMP class. His performance goals for the class were not focused solely on the assets, but more importantly on providing the opportunity for your personal growth and leadership and to prepare you for the rest of your life. All our lives have changed dramatically during the COVID-19 pandemic, and it can feel a little bit overwhelming at times. Please know that this too will pass and you will come out of this stronger. We wish you all the best. Louise Lovell and Florence Mills. We are very grateful to Frank Wisman for establishing the Wisman Endowment Fund at the Shippensburg University Foundation, and to his daughters, Louise and Florence, for their continued support of the program. Mr. Wisman's vision to have a student actively managed fund has been the cornerstone of this IMP program. I look forward to the student presentation, and thank you.
Thank you, Lonnie. And now we are excited to present the 2019 IMP Annual Report. You are able to download a PDF version of the 2019 Annual Report by clicking the link in the chat box or copying and pasting the link into your browser. The link will take you to the IMP website where the past 10 annual reports are posted. There will also be a Q&A session at the end of the presentation. If you look at the toolbar on your screen, there's a Q&A tab where you can submit questions you may have throughout the presentation or ask towards the end of the presentation. Presenting alongside myself is Mr. John Morey, Mr. Nicholas Seymour, and Mr. Jack Cornelli. Jack will begin by telling you a little bit about the fundamentals of the class.
Thank you, Corbin. Our class's investment objective is to achieve a risk-adjusted return higher than the following two benchmarks. First, our primary benchmark we try to beat is 80% S&P 500 and 20% Bloomberg Barclays US Aggregate Bond Index. Our secondary benchmark pertains to international stocks, as we try to beat an 80% FTSE All World Stock Index and a 20% Bloomberg Barclays US Aggregate Bond Index. When evaluating our portfolio, we will use our primary benchmark. Our class's investment strategy is a top-down analysis. We begin by analyzing and discussing the current state of the economy, like what stage of the business cycle we are in, and what kind of growth we can expect. Next, we move into analyzing individual sectors to identify opportunities in the market. Finally, we begin by analyzing individual securities. We take into account a firm's fundamentals, such as their proper business plan and strategy, what differentiated products and services they provide, competitive advantages they can use in their favor, and whether or not they're backed by a strong executive management team. We try to find companies that are undervalued and determine whether or not their intrinsic value is above or below the market price when evaluating their financial ratios. We will use ratios such as price per earnings or price per book in the free cash flow to equity model and the discounted dividend model to evaluate whether or not they are fairly valued. When we look at their financial ratios, we try to determine if a company is healthy or in distress by evaluating their debt to equity ratios and current ratios, as well as their turnover in their receivables, inventory, and assets. We use such ratios to determine how efficient the company is, and we measure their profitability based on their net profit margin, their ROE, and their ROA. In addition, earnings per share and year-by-year revenues can also be very helpful figures to determine whether or not a company projects to grow in the future. The total portfolio value at the end of 2018 was just over $173,000. $136,000 of that money was in equity, $16,000 was in equity ETFs, nearly $9,000 in fixed income, and $11,742 in cash. By 2019, the total portfolio value had grown to over $225,000, with over $174,000 of that money in equity, nearly $19,000 in equity ETFs, over $20,000 in fixed income, and over $12,000 in cash. We achieved this 30.59% increase in our portfolio value in 2019, beating our aforementioned primary benchmark of 26.82%. Our 3-year annualized return of 14.47 beat our primary benchmark of 13.09%, and our 5-year annualized return of 9.42% is just slightly under our primary benchmark of 10.07%. In January of 2019, we achieved a monthly return of 7.74%. In February, we had just a 1.52 return. In March, we had a 2.96% return and a 3.91% return in April, before a hiccup in May caused our portfolio to drop 4.32%. This marked the beginning of a very volatile summer in the US economy. We rebounded with a 5.69% return in June, but just a 1.34% return in July. Our portfolio decreased again in August by 1.15%, then a return of less than 1% in September. Our portfolio did, however, finish the year very strong, beating the benchmark in each of the 3 final months of 2019 with returns of 2.61, 3.2, and 3.19%.
Thanks. Can you guys see me? All right, I'm going to continue. It seems my video is a bit off. Thanks, Jack. That was well spoken. Next, we're going to be going into the risk-adjusted performance. The Sharpe A ratio is the return of the portfolio minus the risk-free rate divided by the portfolio's standard deviation. This helps us evaluate the performance of our portfolio adjusted for risk. The higher the Sharpe A ratio, the more return the investor is getting per unit of risk. The lower it is, the more risk the investor is taking on to earn additional returns. For every percentage point of return, our portfolio had 2.85 units of risk compared to 2.66 units of risk our benchmark had. The Trainer ratio is the return of the portfolio minus the risk-free rate divided by the portfolio beta coefficient. It has the same numerator as the Sharpe A ratio, but instead it measures excess return with reference to the market risk of the beta. Similarly, higher is better. Our portfolio had a Trainer ratio of 29.47% compared to our benchmark of 26.82%. Next, I'm going to be going into our top contributor. Our top contributor to our overall return of 30.59% was Apple, with a return of 86.16% in 2019. Apple released the iPhone 11 and 11 Pro, a new iPad, a second-generation AirPod, and a credit card line. Apple saw a 14% decline in iPhone sales from 2018 to 2019. This was the only business segment to see a contraction in 2019. This release of the second-generation AirPods and the popular Apple Watch caused their wearable segment to increase by 41% in 2019. This is a company that future classes will need to watch closely due to the supply chain issues that they're having and it will continue to have from COVID-19. Although we would have liked to have no detractors, we'll touch on the top detractor for 2019 next. Our top detractor was 3M with a return of negative 7.41% in 2019. On April 25th, 2019, 3M shares dropped 13%, the biggest one-day loss since the 1987 market crash, resulting from quarterly revenue being down 5% year over year. The US-China trade war impacted this decline in revenue by reducing revenue streams from outside the US that accounted for a majority of 3M sales. A few weeks after this, 3M announced the largest acquisition in its 117-year history, the purchase of wound care specialist Acelity for $6.7 billion. This large purchase left investors skeptical that 3M would take on such risk in a reconstruction period and showed lack of faith in their own R&D department, which investors previously found attractive. From this point on in 2019, they did little to boost investor sentiment. And from here, we're going to go on to portfolio characteristics. The IMP portfolio finished 2019 with a price-to-earnings ratio of 33.26. This was calculated by taking the sum of all market caps, and dividing it by the earnings of the stocks in our portfolio, then weighting them accordingly. The S&P 500 finished 2019 with a P/E ratio of 22.78, signaling that the IMP portfolio weighs heavier on the side of companies with higher P/E ratios, ultimately meaning that these companies reflect a growth orientation rather than a value. The price-to-book ratio is the weighted average of all price-to-book ratios of all the stocks in our portfolio. The IMP portfolio had a price-to-book ratio of 9.17 compared to the S&P that had 3.58 at the end of 2019. This ratio can help us approximate how much we're paying for the company's assets that are in our portfolio compared to our benchmark. The return on equity is key to measuring a company's management effectiveness on generating profits for its owners, and in turn is a measure of our effectiveness at selecting companies to do this. The IMP portfolio had an ROE of 31.62, while the S&P 500 only generated 12.47. The beta is a measure of a portfolio's volatility in relation to the overall market. If a fund moves more than the market, the beta would be over 1, but they tend to have higher return potential with the associated risk. The IMP had a beta of 1.04 full year 2019. And on the right-hand side, we have the overall asset allocation for 2019, and the IMP portfolio was made up of 85.37% equity and equity ETFs, 9.01% fixed income, and 5.64% cash on hand. Next, we're going to have John Morey lead us into the equity allocation in detail.
Thanks, Nick. You can see on the left, we have all 11 GICS sectors categorized on the left, followed by columns depicting end of 2019 data for the IMP portfolio actual sector weight, the S&P 500 weights, whether we were under or overweight compared to the S&P 500, and finally, our actual target weight, which we set for each sector. We derived our target weights at the beginning of each semester before we started security presentations. We delegated sectors in the class by assigning each individual their own sector. Due to class size, some people had to double up on sectors each semester. After everyone was assigned their sector, we moved on to individual security presentations, where each student gave an in-depth view into each sector respectively, starting with the top-down analysis for each sector. Once everyone had presented their sectors, we moved on to setting our target weights. Overall, we derived these weights by keeping them generally in line with the S&P 500 weights. In some cases, we deterred farther away from the S&P, depending on factors such as the holdings we had in each sector already and the nature of defensive versus cyclical sectors to meet our goal of making the portfolio more defensive going forward. Overall, most sectors deviate in line with the S&P with some notable detours. These detours that are overweight are noted in consumer staples, as it is historically more defensive in late stages of business cycles. IT, as we had some of our strongest portfolio holdings and we didn't want to take away from the positive returns these holdings brought. We stayed more underweight in communication services and financials, as they have historically performed negatively in late stages of the business cycles. Lastly, our biggest detour was between materials and industrials. This was due to Martin Marietta originally being classified in industrials, when we ended up finding out it should have been in materials midway through the fall semester. Going into our dividend table for 2019, we had a slightly higher dividend yield compared to our benchmark of the S&P 500. We ended the year with a dividend yield of 1.97% compared to the S&P 500's dividend yield of 1.8%. In total, we gained $4,460 in dividends for 2019. During the semester, when we began discussing consolidating the portfolio, we made it an emphasis to try and invest more in dividend kings, which would continue to increase our dividend return for future classes. This is also in relation to our goal to get our annual dividend return higher than $5,000. This is because we want the annual withdrawal for the scholarships to come solely from dividends, which would enable all the returns from our holdings to go directly into the portfolio and enable the class to further invest and strengthen the portfolio with strong performing securities. Starting with student experiences, when taking over the portfolio starting in the summer of 2019, we were faced with various levels of uncertainty and volatility in the market, which was watched closely by the class. The major storylines that impacted the summer and subsequent following months were stemmed from the ever-changing and constant threat that came from the US-China trade war, as well as the various indicators from the bond markets during these times. For instance, the inversion of the treasury yield curve between short and long-term duration bonds. That indicated for the potential of a recession. Hold on. To begin to combat this, the class started by analyzing financial markets and various business segments through top-down analysis. We determined, as I've said before, what we believed were in the later stages of the business cycle and headed toward, if not a recession, a significant slowdown in economic growth. Likewise, as I've stated, we began with sector analysis and subsequently by giving sector presentations and then deriving our target weights for each sector from there. We then went on to our security pitches / presentations for the year by pitching securities that were in line with our target weights and our overall goal of further consolidating the portfolio. Going into the goals we set for the class, we really made it a point of emphasis to increase our fixed weight income. We did this to achieve this goal for the most part, although we fell a bit short by fully meeting our benchmark of 20%. However, we were able to increase our fixed income weight from roughly 5% in 2018 to nearly 10% at the end of 2019, and even more recently, the portfolio's current fixed income weight is roughly up to 15%. Additionally, we made it an emphasis to consolidate our equity holdings in the portfolio, and also, as I've stated, to invest in the dividend kings. This was in a large part effort to mainly distribute more capital income to our historical winners and to overall bring more stable streams of return for the portfolio. As a major threat we saw this year, as I previously stated, was the ongoing threat of the US-China trade war. We even saw this once the Phase 1 deal was finally made public, which was contributed by even more uncertainty in the deal itself, which caused continual volatility. To combat this major issue, we identified areas that the portfolio was at risk to potential backlash by being exposed to China. For instance, we held a Chinese tech company called NetEase, which we ended up selling out of our position due to the uncertainty the class felt around the security. Additionally, we analyzed several companies' supply chains through the Bloomberg terminal to see how exposed they were to China. Lastly, we kept a close eye on various PMI reports to gauge certain manufacturing metrics as well as gauging overall business sentiment. Now, I'm going to give it back to Corbin.
All right. Some other notable actions taken in the fall includes the class realizing gains and unfortunately some losses in accordance with our goal in consolidating the portfolio. The class then took the proceeds of these sales and reallocated them into existing holdings and other defensive stocks. For example, the class decided to purchase more shares of Disney and AT&T. Pertaining to Disney, we view Disney as having more upside potential as they introduce their new streaming service, Disney+. The class viewed this segment as an opportunity for future growth for the firm, because typically with streaming services, the main challenge is acquiring customers and providing original content. However, Disney already has original content in their vault from a long history of movies and shows that they aired since they first started. Also, they seem to overcome the challenge of acquiring customers having already passed 50 million subscribers, where it took Netflix at least a year to pass that mark. We also view Disney as a stock that can withstand economic downturns and come out the other side as a survivor. In terms of AT&T, there's new growth opportunities for the company when considering the rollout of 5G. It is up for debate whether AT&T will be the sole winner out of the wireless networks in terms of 5G growth, but we are confident that we will still see an appreciation in value as a result of this new technology. The class also purchased shares of the Hershey Company, who resides in the consumer staple sector and is considered a defensive stock. The stock did come out to be slightly undervalued when we made our pitch, but if I'm being honest, we did have some other motives for buying this stock. For example, Hershey is relatively close to Shippensburg University, and we viewed this as a tremendous opportunity to enable future IMP classes to attend Hershey's annual shareholder meeting at the Giant Center as actual stakeholders of the company. Furthermore, the IMP class also continued to focus on fixed income with the sale of VanEck Vector's emerging markets high yield bond ETF, and then purchasing AGG, BND, and SPAD. VanEck was a holding in the portfolio that should have not been there to begin with. As you can tell by the name of the ETF, the fund holds high yield, or also known as junk bonds, which the IMP class is barred from investing in as stated by the IPS. As a side note, we thought that the fund would be a great investment for an individual who's willing to take on more risk in their portfolio because it was relatively stable in price and paid really attractive distributions, but it was still not qualified to be in this portfolio. Nonetheless, we bought other fixed income ETFs such as AGG, BND, and SPAD. These are all ETFs who track the same fixed income benchmark as us, being the Barclays US Aggregate Bond Index. We understand that in order to beat the benchmark, you have to invest differently than the benchmark. However, at the time we purchased shares of these funds, they only accounted for 10% of the portfolio weight. So the idea was to incorporate these ETFs so the IMP portfolio never would deviate too far from its fixed income benchmark, and then use the remaining 10% of wiggle room in the fixed income sector to purchase other securities that would provide the potential to lift our fixed income return past the benchmark. And finally, what the health? We saw some drama within the healthcare sector during the fall semester. We had multiple holdings within that sector losing value in our portfolio, and we really struggled to find out why they were losing value. The only reasonable explanation that we could find is that maybe other investors viewed these securities as overvalued because we couldn't find anything within the operations of this business that warranted such a sharp decrease. We also saw lawsuits filed against firms like J&J, which we actually discussed during the semester about whether we wanted to keep J&J as a holding or sell out of it. And we eventually concluded that J&J is a company that has enough cash on hand to withstand payouts from lawsuits that they were being filed for, and ultimately just decided to hold the stock. Overall, the healthcare sector was just a really hard sector to depict an outlook for and just explain in the late stages of 2019. So this brings us to the start of 2020, where the class conducted another top-down analysis. Our opinions about the economy did not change much as we agreed to continue pursuing our same goals that we established in the fall. But next thing we know, the coronavirus emerges, causing disruption among global supply chains and some companies coming out with profit warnings. Facilities began to close and travel bans were being implemented. The class also took into account the political climate, specifically paying attention to the Democratic race. Although we would not recommend making investment decisions kind of as like a bet who's going to win the presidential election, it would be naive to assume that the headlines pertaining to the election didn't have an impact on the market. And lastly, we prepared for slowing growth as the Federal Reserve Bank came out and said so themselves to expect slowing growth, not just within the US economy, but on a global scale. Little did we know that coronavirus would eventually be announced as a global pandemic. As it began to emerge in the United States, markets began to price in the impacts of the virus. We saw the government pass relief packages for businesses and individuals. Businesses began to close as restrictions were being implemented, while other countries went into a full national lockdown. Also, the global asset management education competition was canceled. This left the class feeling a little disappointed as we were excited about the knowledge we would gain at breakout sessions and just the overall experience of being part of a forum of that prestige. Nonetheless, we are proud that the Wisman Fund placing third place in the undergraduate value portfolio division. The current IMP class would like to give a huge shout out to the spring IMP managers of 2019 for helping construct a portfolio that performed so well last year. Moving on, Shippensburg University's classes were moved to be 100% online following spring break. and all the managers eventually made their way back home. To work around this distance, we held Zoom meetings at the same time as regular class time so we would not miss a beat. However, being moved online did make the construction of the annual report more of a challenge, as we were not able to physically get together and work together as a team. Even with these difficulties, we are proud of the final product that we were able to assemble. Finally, the class began viewing COVID-19 as an opportunity. You could debate that the market may have been overvalued before the crash. However, it is not up for debate that prices are at a lot more attractive of a valuation. So class decided to jump on the opportunity and buy more of our winners. We decided to buy more Disney stock again for the same reasons that I mentioned before, as it was at a cheaper price than it was when we purchased it back in the fall. Unfortunately, there was not a lot of cash on hand in the portfolio to be able to purchase more shares of other stocks. And the class did not feel that it was the best idea to either sell holdings at a discount or at a massive loss and just lose the gains that we already had. So when our amount of cash became too low, we decided that the best action would be to take no action and ride out the downturn with anticipation of the market rebounding in the future. As Dr. Pan would always say in his investment courses, we decided to stay the course. Next, I would like to kind of just talk about what this class means to us as a whole entire class. And I'll start off and pass it off to some of my other students. For me, this class means a whole lot. It's allowed me to grow tremendously, not just as a student or a leader, but as a person. My leadership skills grew immensely. My communication skills grew a lot. And just the experience of being able to work with other students who share the same interests with you was just amazing. Like for me, I don't really have a lot of friends or family that are into the financial markets as I am. So being able to come into class every day and just have discussions and get other people's opinions that may have never crossed my mind was just something that I valued deeply. I'll pass it over to Jack so he can give his 2 cents.
Definitely. Thank you, Corbin. For me, when I set foot on Shippensburg's campus 4 years ago, it was all about their opportunity to provide their students with a real world experience. And I knew how highly valued that was through not only the business school, but also all the way through campus. And this class kind of exemplifies what Shippensburg means and how much they care about their students. The opportunity to work in such a collaborative environment is definitely going to serve me well as I continue my job search and I move into the job market in the future. With that being said, I'm going to pass it off to Nick, who also wants to share some of his student experiences.
Thanks, Jack. Okay, I'm going to be going through one experience I really enjoyed and then an experience or maybe an idea that I think can improve the class. So one thing that I will attest to the spring of 2019 class, when they brought us on, we got to sit in on a class, and I really saw the cohesiveness that the class had, and they really pushed each other to be better. It wasn't that someone was presenting mediocre work and the other students were going to sit by and let that fly. They really pushed each other to be the best, and I would say that our class adopted that attribute, and we took that forward, and we held everyone to a higher standard. We really pushed each other to make the presentation as best as possible, do the research, and really gain as much experience from this class as we can. That being said, I think there's kind of a gap in management that I want to address. I think from going from spring to fall, that transition through the summertime, we're supposed to be active portfolio managers, and during the summer, I definitely felt a fall off just because I wasn't prepared to manage a portfolio. I have never done it before. And I think one class in the spring might not be enough to really wrap the new students' heads around portfolio management. I think that maybe a few classes to really get the idea around. And one idea that really led me to this conclusion is Zoom. We have Zoom now, we're using it actively. I don't think there's any reason that we can't use it during the summertime, maybe to meet once a month, maybe give an economic update just like in 2019, we saw a big fall off come summertime. And I think this can really improve the class if we have a little bit more focus on the summertime with the portfolio management. And next, I'm going to pass it over to John Morey to give his insight into the IMP class.
One thing IMPs helped me with, two things actually, would be teamwork, working in a group, collaborating like Jack previously stated, and also public speaking skills, because we're required to, go and talk in classrooms and give open house presentations and presentations like this, even though I'm not sure if this counts as public speaking in the comfort of your own home, or like the semi-annual report presenting in front of the FAC. So I just think public speaking, it's huge, and working in a team and working with others helped me a lot. I don't have a job offer yet, but I have a second interview whenever they want to interview me in person with Alvin Butts. It's a construction manager in the Lehigh Valley. I'd be working as a project accountant. So it's not there yet, but I'm hoping. So I'm going to pass it off to Andrew so he could talk about his experiences a little with IMP.
Thanks, John. With my experience, I started off before this class being interested in investing, but not really having the knowledge that I think other students in the class had. And I want to give a big thanks to Sean Fox because he convinced me to take on this task with him. And I think the best part about IMP wasn't really in that 2 to 3:15 on Tuesday and Thursdays. It was before the class, a lot of us would show up 30 minutes early, 15 minutes early, and be able to be creative and bounce ideas off of each other of stuff that we're passionate about. And the knowledge that I learned from the other classmates really helped me in my job search now. I'm starting to look at different jobs in wealth management, and after handling the healthcare sector, I'm really starting to look at different healthcare companies and financial analyst positions within them. I think, like Corbin said, there's no better class at Shippensburg that can give you the confidence and leadership skills. And that's definitely some advice that I'd like to pass on to the next class is just take everything you can out of this class. I'm going to pass it off to Morgan now.
Hey everyone. So my best experience from the IMP class was just learning so much about how to evaluate stocks and doing pitches and just getting the hands-on experience that a regular class couldn't give me. Going into this class, I had no experience with stocks or investing, so I wasn't really sure what to expect. But all of the students were so helpful, and I was really able to learn a lot from them because of their experiences and knowledge that they all had from other classes. Overall, this experience was great for me, and I learned a lot. And although I wish we were able to continue face-to-face meetings, I think that we all did a good job of adapting to doing things online. And I'll definitely be able to take a lot from this class and apply it to my future careers. Give it back to Corbin.
Thank you, Morgan. And yeah, as she mentioned, one thing I really liked about this semester, well, didn't like, but could appreciate, is just how hard the class worked. Even when we went online, we really had to find ways to work around the distance, as I mentioned before, with constructing the annual report and all that. But through all that adversity, I thought that myself and the rest of the class handled it greatly, and we still were able to come through and give this presentation today, although it's not dinner. Hopefully you guys are eating lunch while you're watching this, but I'm just really proud of the class being able to be innovative in a time where we never had an experience like this before. So finally, getting close to the end, we have recommendations for the portfolio moving forward. First, we recommend to continue consolidating. When we took over the portfolio in the fall, we had around 40 holdings and wanted to bring that down to around 30. Currently, we're sitting around 35, I believe, but we think that the portfolio should reach that 30 mark because that will just make it a better portfolio, considering once you reach a certain amount of holdings, the marginal diversification that is added to the portfolio when you buy another security isn't really worth it. Next, we recommend to continue to focus on dividends. As we mentioned before, we had the goal of getting the dividend income above $5,000 to be able to cover the scholarships that the foundation gives out to finance students. And overall, it's just a great idea to increase dividends because that creates a passive stream of income for the portfolio that enables you to take that money and reinvest it and buy more of the securities that we already own, or if you want to go out and buy a new security without having to liquidate a position or trim a position to raise capital to make those purchases. Next, we recommend to continue investing in fixed income to reach a balanced weighting. Not necessarily have to match our benchmark of 80 and 20% because we are trying to beat the benchmark, but it's still a good idea to diversify the portfolio a little bit, and adding more fixed income will help make the portfolio more stable and less risky, and in turn help achieve that dividend goal of getting our distribution income up. So we just think that it'd be really smart to continue investing in fixed income. And finally, we think when buying a security, think to yourself, would Shippensburg University be proud to own this company or fund? Ultimately, the portfolio is a reflection of the university and the College of Business. So we think that it's important that when evaluating companies or stocks or funds, that you really look at what their core values are and make sure that these core values are in line with the values that the university has. And before we move into the Q&A, I want to thank you all for attending this presentation. The IMP class has put a lot of effort and has been looking forward to this day for quite some time now. We would also like to thank the SU Foundation, the College of Business, members of the FAC, and Shippensburg University as a whole for continuously improving this program and allowing the opportunity for us as students to be a part of such a unique experience that I'm sure all of us will remember for years to come. And I would like to make one correction before we get into the Q&A. I was notified that the seed money for the IMP program was actually provided by Dr. James Pope, who was Dean of the John L. Grove College of Business at that time. Sorry for that mistake. But yeah, now we're ready for Q&A. So you're able to click on the Q&A tab and ask any questions, and we can either answer them live or we can type answers. I'm going to hand it over to Mr. John Moats to start our closing remarks.
Yeah, thanks, Corbin. Good afternoon, everyone. I'm John Moats, the Vice Chair of the Finance Advisory Council. I just want to say a big thank you to our student presenters today, Corbin, John, Nick, Jack, and a big thank you to all of our students from the classes of Spring 2019, Fall 2019, and Spring 2020 on a job well done. Congratulations on your well-deserved third place finish in the undergraduate value portfolio in the 2020 Game Forum Global Portfolio Competition. For those of you who might not know what the Finance Advisory Council is, we are a group of working and retired professionals who volunteer both our time and treasure to the finance discipline at the John L. Grove College of Business. The IMP is one of the flagships of the finance program. We meet with faculty, staff, the foundation, and students throughout the year to offer real-world experience, current trends, networking, jobs, internships, resume help, advice, and general assistance to the program in a variety of ways. I'd like to welcome some of our new members this year and wish a thank you farewell to those on the council who will be rolling off. In addition to those who are stepping down, I'd like to take the time to wish a big thank you to our outgoing chair, Jen Sassani. Jen has been a part of the Finance Advisory Council for 15 years. So Jen, thank you so much for your years of service to our great program. I'm sad that we won't be able to see you off in person, but I'm hopeful that you'll come back and visit us as often as you can, and we'll be able to celebrate your time with us soon. At the conclusion of the academic semester, I'm going to assume the position of chair, and I'd like to welcome Michelle Chopper as our new vice chair. Finally, I would be remiss if I did not take the time today to thank Dr. Rim, who will be retiring this summer, for his almost 34 years of service. Dr. Rim was a professor here during all 4 of my years while I attended Shippensburg University for undergrad. I can sincerely say, Dr. Rim, I will miss your steady hand of leadership for our department, your mentorship, and your friendship. I hope I'll continue to see you come visit and try to put up a better score than my team at the annual College of Business Golf Tournament. Congratulations on your well-deserved retirement. To all of you who have taken the time to attend today, truly thank you. This program would not be what it is today without the incredible foresight of Mr. Wisman, but also without all of your incredible contributions over the years. While we are saddened that we can't meet in person this year, we look forward to being able to see all of you very soon. Please stay safe and healthy, and I'm going to turn it over to Dr. Rim for his remarks.
Okay, thank you for your good remarks. And I really thank you for everything you have done, FAC members. And of course, my thanks go to other people, Dean and the staff members at the College of Business, and especially in my department. And Anita Weaver and Anna Bruno, I gave you sometimes too much work. So anyhow, in some sense, I'm kind of relaxed. In other sense, I feel some emptiness in my heart. But you guys, IMP students, you did a really good job. And my best wish for you all, move on, okay? As the school catchphrase says, your success is our goal. And I hope you learned a lot, but not enough, okay? Your world is much bigger than you expect and you think. And think of that. These days they call BCAC again, not before computer and after computer. They said before Corona and after Corona. So I don't know why this is like coincidence. I retire with the Corona. Okay, I hope Corona will be done by that time. I officially retire August 14th. So there is 34 years of teaching at SU. I taught most of finance courses. And I had good time and better time, good memories and not good memories. But all these are just history. And this much is my part. And you have to move on. Someday I want to see your names on the list of top managers in America. CFO, CEO, and the CIO, Chief Investment Officer, like that. Okay, you can make big difference. I call this law of one person. Okay, one person can make big differences. So my best wish, and I give real thanks to Dean Cooley and Dean Pope also, and the other deans. I served from Dean Hunt and all the way, okay, to Dean Cooley. I should have listened to him, okay, when he said I don't retire. And it is a good time for me, but sorry for that. I really feel sorry for finance colleagues, okay? And you guys have all the burden now after I leave. And you have to carry the torch of good program into the future with help of FAC and all other administrators. So at this time, I really ask Dean and provosts and presidents to consider finance program. And we lost 40% of our staff members because of my retirement. And we need a good replacement with much more enthusiasm. Okay. I will give thanks again to all of you. My best wishes. God bless you. Now, Dean Cooley is the person for closing remarks. Thank you.
Thank you, Dr. Rim. You have been inspirational to me, of course, throughout the years. So I appreciate everything that you've done for the John Elgrove College of Business, and particularly the finance program. Well, on behalf of the John Elgrove College of Business faculty and staff, I would like to thank you for your participation in IMP virtual presentations. Our students put incredible amount of time and energy to make this event possible and successful. I would like to acknowledge Corbin. Corbin has really been instrumental in making this day possible, I should say, along with his team. He has been truly inspirational to me in the midst of diversity. He has done an incredible job working with his team and John Motes, Dr. Rim, Lonnie, Anita, and everyone else to make sure, and especially Scott also, to put things together so that we will have a successful presentation today. And I am really grateful to every single one of you. I am very honored to be part of this legacy, and hopefully that you, as you move on to the next level, you wouldn't forget about your school. You come back to us, and this is your home, and we wish you obviously the best. I would like to also acknowledge Jennifer Sassani, really for her service to FAC. We are very honored to have you for a long period of time to serve in the John L. Grove College of Business and the Finance program. And we hope for you to continue in one way or the other to help us in the future. I want to also congratulate you. You were inducted last night into Beta Gamma Sigma. So congratulations to you. I would like to also thank Dr. Lori Carter, our president, and Dr. Leslie Clinton for their incredible support of this particular program. Again, as I said, Dr. Rim, you will be missed dearly, but I hope that you will continue to be part of SHIP. Finally, I want to also thank Scott Donald, for his support throughout the semester. Really, you have been instrumental to us in making sure that we do our job and do it easily, I should say. So please stay safe and have a wonderful weekend.